Let's just start off. I want to come back to some things you said on the call. You said other than in healthcare, where elective procedures have started to come back, that the channel has been cautious and you haven't seen strong restocking. Give our viewers a little more sense as to what that means, what that's reflective of, and how you're sort of dealing with it.
Yeah, and good morning, David. Thank you for having me on today. We did see, I would say, sequential improvement, and we talked about this from Q2 to Q3 across all of our businesses, across all of our geographies. And that was led by strong demand in key areas like personal safety, home improvement, some of the trends that we've been seeing in the middle of COVID. But even businesses that are down year over year and markets that are down year over year, they improved. And so elective procedures, for example, got better from Q2 to Q3. It's somewhere in the range and where we can measure it accurately in the US and Europe. It's somewhere around 70 to 75% of what would be normal for elective procedures. So that got better off of Q2. And we saw sequential improvement in other markets as well. Automotive build rates got a little less bad as we came into Q3. And so then the question about what's happening in the channel around that, we see the distribution partners that we work with in each of these channels, they're cautious as they look into the uncertainty of what's going to be the impact of COVID, and they are not driving a big restock. We did see some restocking in healthcare, I would say medical solutions and oral care for us both. We saw a little bit of restocking through really the first couple of months of the quarter. And then it's been, I'd say, cautious as we move into Q4.
Right. But I mean, I guess, and you said this as well, or, you know, your inventory levels, you said you count on us to make sure our inventory levels from a velocity perspective keep improving. But I guess it's very difficult as the pandemic continues to go on here to figure out how where your production levels should be, isn't it?
Yeah, there's a lot of uncertainty out there. We still have our guidance suspended, so we are cautious as we move ahead. We expect some of the trends in the markets to continue. We did highlight on the call that we saw elective procedures kind of flattening as we came out of September into October. We're managing our inventory around the demand that we're seeing, and we've got almost half of our businesses are down, seeing declines in their end markets year over year. So we're managing businesses that are down significantly. At the same time, we're managing businesses like our personal safety business that's got big uptick in demand. So we're managing our production levels around that. We're managing our supply chains around that and our inventory. We did make good progress in Q3. We saw, strong demand driving, and I think we reacted effectively to it. One of the things I highlighted is how we've become much better at reacting quickly to the changes that we're seeing in the market. That's been something our teams have focused on and really a strength as we go forward. So we do expect to be able to manage through that uncertainty and be able to continue to improve our velocity on our internal inventory. And then we're also watching closely what's happening in the channels that we work with.
Yeah, well, I'm sure something else you're watching closely is simply sort of how the virus is progressing, unfortunately, through the population, both here and around the world. I mean, I know you have multiple scenarios. I would assume that you're gaming out in terms of some of the things we just talked about, Mike. But what are your best guesses in terms of what it's going to mean, both on the positive side for some of your businesses and on the negative for others?
Well, it really is the big factor out there. As COVID goes, so go the economies. We aren't even putting guidance in for Q4 because of the uncertainty that we see. We do see trends in the early parts of October as we've come through to date. The trends are similar to what we saw in September. So we're seeing strong demand, as you would expect, in our personal safety products, personal protective equipment. Home improvement continues to see strong demand. We see strong demand in digital first kinds of impact, like our data centers. We see strong demands in biopharma filtration. At the same time, we still see softness in areas like office products and in hospitality, oil and gas. Those are all areas that we see continue. So the trends have continued early October. The uncertainty says we've got to be ready for, as you said, multiple scenarios. So we're managing a daily rhythm really as we execute. It's really, I think, part of what I compliment our team on executing well in Q3 was managing that daily rhythm around our operations.
Shepard Smith here. Thanks for watching CNBC on YouTube.